Hello and welcome to this technical analysis video here at xm.com. It's June 22nd and today we're going to look at WTI oil futures ahead of the OPEC policy meeting today in Vienna, where oil suppliers are expected to have a strong debate on whether to increase supply, a proposal that kept prices under pressure this month. So zooming into the daily time frame now, we can see that WTI oil futures have been more or less steady over the past 2 weeks after breaking below this long-term uptrend line. And if we look at the momentum indicators down here, those are suggesting that consolidation is likely to continue in the short term since the RSI is pretty close to its neutral threshold of 50 and the MACD is attached to its red signal line. Though downside risks have not faded yet, as both indicators are still in bearish territory. The RSI below 50 and the MACD below 0. Moreover, if we look at the Ichimoku indicators over here, the red Tenkan-sen line has flattened but remains far below the blue Kijun-sen line, which is also missing direction at the moment. And so now looking for support levels in case the market weakens. Immediate support could come from the 65 key level before we head down to 64.20, which provided some base to the market over the past 2 weeks and was also resistance back in April and February. Then if the price continues to fall below that, the next target could be the more than a 2-month low of 63.37, while lower 61.80 could attract a greater attention because any substantial close below that would likely form a lower bottom, violating the long-term upward pattern and at the same time confirming the start of a downtrend. On the flip side, however, if the price extends to the upside, the area around the 67 psychological level, which overlaps with the 38.2% Fibonacci of the downleg from 72.87 to 63.37, could possibly offer resistance. This is also where the red uptrend line happens to be, so it should be of interest before we reach a stronger obstacle at the 50% Fibonacci of 68.09, meeting at this point the 50-day moving average as well. A move then above from here would position the market comfortably back above the red uptrend line, suggesting that this bullish uptrend line is likely to remain in place for longer. Further up, the next stop could be at the 61.8% Fibonacci of 69.24. Finally, turning to the medium-term picture, we can see that the market turned neutral after the price crossed below the 67 key level. And if the price manages to rise above it, and more specifically break above the 50-day moving average, then bullish sentiment could come back into play. On the other hand, bears could take control if the price drops below 61.80. So that's all from me. Thank you for watching and have a great day.